What makes your product different than the ones in the past?
The main difference is we come from a real estate background. And so what we've designed and what we've created with our technology has not been created before. Like that's really our distinguishing factor is that this tool, this offer negotiation tool that produces a purchase contract, is just one element of many others that are super unique and proprietary to us. And that's the idea behind this, is to create something that not only can get you through a transaction, but then do things beyond the transaction to help while you're living in the home to make it really easy for you.
All right, guys, welcome to another episode of The Report. Today, we are back in the studio here in San Diego, and I got a very special guest who has a new branding, a new technology that is going to disrupt the way that real estate transactions are done in the residential space across America. I got none other than Brad Rice. Brad, welcome to the show, my man.
Yeah, thanks, Rich, man. I'm super excited to be here. Had a nice drive down. Beautiful day. You cleared the weather for us. We're ready to go.
Dude, the weather's finally, brightening up down here in Southern California. I think this has been the coldest and wettest winter I've ever felt in SoCal.
Well, believe it or not, they said 1856 was the last recorded weather for this much wet rain. 1856, we beat that.
Really?
So,
wow, that's almost 200 years.
That's right.
That's crazy to think about. And you were a San Diego State Aztec. You're an alum.
I was.
How about them Aztecs made that run to the championship game, March Madness?
Man, buzzer throw. I mean, come on.
Insane.
First time ever. Yeah, that was fun to watch.
Hell of a run. Shout out to the Aztecs. That was fun. Bummer they lost to UConn. But, man, UConn was tough. They were just crushing everyone in the tournament, slaying them.
Not much we can say about that.
Yeah. Anyways, Brad, before we jump into everything with what you're doing with Homepie and all that thing, I'm super intrigued with everything you guys are doing. Why don't you just give us and the listeners a little background overview of who you are and what your background is in real estate?
Yeah, happy to, Rich. So I'm a guy who's always been in real estate. I graduated college in 1993. I was getting married and buying my first house at the same time. But just before graduating, while I was going through buying my house, I was a finance major. I did have a minor in real estate, which was unique. I actually didn't finish at San Diego State. I started, but I finished at Cal State Northridge. And they had a real estate minor. And I thought, okay, I want to do something in real estate. I grew up kind of around it. My dad was an architect, a general contractor, and a builder. So I loved real estate. I loved the whole idea of it, but didn't know what I wanted to do. I was going through buying my house, and I'm like getting the loan, and the lady that's doing the loan, I'm like, this is really interesting. I'm good with numbers.
Mm-hmm.
So I spent a day with her, and I fell in love with it. And so I got in the mortgage business. And so this was early 90s. So if you can imagine, flip the clocks back, Rich, really pre-internet, right? Everything we did was in person. So taking loan applications was in person. I'd drive around, doing a lot of FHA and VA loans. I was meeting veterans in their homes and that sort of thing. But I had a mentor, and he said, this is what you do. And I did it. That was it. I packaged mailers. I took them to the post office. It was everything. And before you knew it, I was doing about 14 loans a month, which I became a top producer in no time. I ultimately wound up being a partner in the company. And then in 1999, I started a company called Mortgage Corp of America. We did wholesale and retail loans. Wholesale was under the name Zone Funding. And we grew that company for 8 years until the recession hit. And that's when the wheels fell off the bus for us, along with many others. And so I was forced to close in 2007. And that was a big life reset and a big lesson. I was all in, right? This was a situation where I was growing the company. I was reinvesting capital. I did well. By the way, always spent time with my family, vacationing, that sort of thing. I never forgot about that part of it. So I was grinding and I put a lot of hours in, but it was always part of the family, right? So that was a big reset. I spent a few years just kind of on forced retirement. I says, okay, what am I going to do with myself? And then I got back into mortgage. It was what I knew. And so I did that for the last decade, kind of on a small scale, and recently decided to grow the mortgage company. And along with that, came up with this idea that we'll talk about and started working on it.
There's so much to unpack there. And I think a lot of people, when they look back at the '08 recession, they forget what caused that recession and all these, stated income loans. But I'm very curious for someone that, owned their own mortgage company and was very active during that time and built up towards the, 07, 08 crash. What was going on in your mind leading up to that? Did you see the writing on the wall? What was that like?
Yeah, 100%. Look, did you see the movie The Big Short?
I did.
Okay. Fairly accurate. I mean, really fairly accurate. So because we were doing wholesale and retail loans, which means we were working with the retail consumers. So if you wanted to get a loan, you'd come directly through us. We had a call center and all that. Or we would take loans from mortgage brokers, and then we would go through and underwrite and fund those loans. So we were really doing everything. But beyond that, we even wrote our own mortgage product, and we sold it directly to Wall Street. And because we were working directly with Wall Street, so these are big companies like Bear Stearns, Lehman Brothers, Deutsche Bank, even Countrywide Securities. Because of that direct interaction with them, we learned a lot more about what was really happening behind the scenes. So the things I've heard you, so I know you know a bit about this, but really what was happening is we agreed, right? So we were doing, if you weren't doing the loans that Wall Street was hungry for, you were barely doing any loans. So if you stuck with, say, just conforming, Fannie Mae, Freddie Mac loans, FHA, VA, and you didn't do the subprime loans or the pick-a-pay, if you remember those, the negative amortization loans. You just did such a small volume of loans, it was hard to survive. So they were paying up for this other product. You would make money selling this other product. And so you had to. We weren't the ones, as the company that was funding the loans and then selling them to Wall Street, we weren't the ones that were saying, what they wanted. They said, this is what we want. Go find these loans, bring them to us, we'll buy them.
Like at the time, was Wall Street buying the loans that were quote unquote non-conforming, or let's say were based on stated income?
Yeah,
they were.
So these are subprime, which would be stated income, even what we would call NONI or NINA loans, no income, no asset. Like these are really like the Big Short. Like if they could fog a mirror, you could give them a loan. They could have had a bankruptcy yesterday and they're doing 100% financing, right? Which works in a market where property values are increasing all the time. But as soon as they're not, as soon as they level off or go down, it's a disaster. So I'll give you a quick story because I think this is significant. So 2005, we're at Mortgage Banker Association convention in Chicago. Beautiful place. Giant, and this is when the conventions were absolutely extraordinary. They were big. To give you an idea, Countrywide there had a 4-story booth, right? So we're talking about a booth they take on the road. It was 4 stories tall.
Oh.
Like we're talking big money, decadent parties, like ridiculous. We're there and, having meetings and that sort of thing. And we sat down at the institution, we remain nameless, but sat down with the manager of the trading of the trading floor that we used to sell some mortgages to, and hadn't ever met one of the traders that we would sell these pools of mortgage to. But that was the time where we could actually meet in person. We're sitting there, we're chatting for a few minutes, waiting, and then comes in the room this kid. And I would say kid because he was in his maybe mid-20s, right? And he was the trader that was buying these mortgages from us. Well, he comes in, he's wearing an overcoat, he's got his hair slicked back. He looks just like Wall Street, like the movie, right?
Right.
He comes in, we sit down, we're chatting, and I knew, and I was one of those guys because I came from retail, meaning I was a loan originator. I was doing loans for the consumer. I knew that these people that were signing, that they were making X amount on their applications, they weren't making that. Like you just knew. And so this stated income thing was it was a liar loan. And I also knew that I wasn't smart enough to short the market. I wish I knew that. But I also knew that this was going to fall apart as a house of cards. As soon as the property values stop increasing, this is it. But we used to do something very unique. We used to actually call to try and find out if it was a straw buyer, meaning not really a buyer for this loan, but somebody that was just signing on the paperwork and using their social. We used to call and try and ferret those out. As a wholesale lender, that was kind of unheard of. We used to do that.
So a straw buyer, I've never heard of this. So what exactly was a straw buyer, and what's the benefit from the straw buyer's perspective?
Right. So they would get paid to put their name on a loan, right? That's their benefit. So if you remember from the movie, like you would have these gardeners or these strippers that would get like 10 loans. Well, there was a certain limit to the number of loans a person could get in some products, or maybe they just couldn't get the loan for one reason or the other, and so they would go to, let's just say you were a landscaper, and I said, hey man, I'll give you 10 grand if you sign on this loan for me. I want to buy this house, but I can't do it. You'd be a straw buyer. That's illegal. Can't do that, right?
Yeah.
And so we would try to figure out if these were straw buyers by making phone calls, and no wholesale lender had ever done that at the time. So I'm talking to this guy in Chicago, back room, decadent party, all this sort of thing, and I said, hey man, I go, what are we going to do when the property values, start to decline? Like this isn't going to work. We can't keep doing 100% financing. This isn't going to work. Now, remember, these guys were making tons of money, and they kept just chopping up these loans and selling these derivatives to keep it going. So that's why, okay, we ran out of being able to do loans with 20% down and a 650 credit score. So now let's drop it to 620 and we'll go to 90%, or let's drop it to 580, we'll go to 100%.
And Wall Street was buying
happening.
those? 100%.
They
with
were
580?
writing the product. They were saying, we want this.
Wow.
Right? And they were selling these to, to their investors, which are pension funds and that sort of thing. And the paper was it wasn't worth nothing. We knew that. Anyway, this kid got so angry because here I am talking about disrupting his personal income that he stood up and he slammed his hands on the table and he said, if you don't like it, don't work with us. And he was stormed out. And his manager apologized, said, I'm sorry, he's a little bit of a hothead. Well, but that was the mentality of the day, right? That's what was happening. So when we compare, because I've listened to some of your exchanges and I know you know a bit about this, but that was what was happening and what was so different then than it is now. So yes, it's an inventory thing. Lack of inventory causes property values to go up. We got a lot more buyers than we have sellers. But the fact that the product we were writing then was so bad, the paper was so bad, that was a big cause of the crash, right?
Back then, could you refi from a 100% loan and then refi, like do a cash out refi and do another 100% loan?
Yeah.
Stated income.
You could do that. You could do that.
And at the time, I mean, I remember from 05, 06, 07, property values were just jumping quick because of all this activity.
Yep. And that's why it worked for a period of time.
Mm-hmm. And then you would just use the cash out proceeds to maybe pay your debt service for another year, potentially do another cash out then.
That's what people were doing. They were buying way above their head for the chance of being able to make money on it.
It's crazy to think about. Well, today we got the non-QM loan products where they don't, check tax returns. They're not looking at your personal debt to income. As long as you have a good credit score and the property sizes up in terms of like a DSCR requirement, they'll fund these loans, which I actually personally, I've done a few of them. I like them in the sense that like I don't have to go do all this paperwork and get a full underwriting process. I kind of like it, but that is a product that is less sellable in the secondary market. I know that.
It's funny. I had this conversation literally just 2 weeks ago. We're taking these are inches we're taking, but yes, product is expanding and has continued to expand. Again, it comes from when you don't have enough volume of, if we look back just, 7 years ago, it was almost all just conforming product. Like the non-QM, people were kind of afraid to do it. Was there, what are the real guidelines here? What are the real, what do we have to do? What's the ability to repay? And, do we follow, following the Dodd-Frank Act and all these other things? Like there was still a lot of uncertainty, but as soon as they kept doing a little bit more and a little bit more and a little bit more, the product starts to expand. So is it like it was? Not nearly, but yeah, we're starting to write some paper that's not as solid as it was just, 6-7 years ago.
Yeah. At what point in that 07-08 crash did you know, okay, this is the end of this run? Learning to become a successful real estate investor can take a lot of time and dedication, which some people just don't have. If you're one of these individuals, this doesn't mean you can't invest in real estate. My company, Summers Capital, is buying a bunch of boutique hotels right now, and you can invest with us in these deals without having to do any of the work. Our team sources the deals, we secure the lending, we take care of all the renovations, and we even handle all the day-to-day operations with our in-house management company, making it truly hands-off and passive for our investors. If you want to learn more to see if we can help you, go to summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show.
Did I personally know?
Where you knew, okay, the mortgage industry and the residential real estate values are going to start to come the other way. At what point did you realize that?
Yeah, that was definitely in 2006. In 2006, we started to get the feeling it was slowing down, and we started to see more foreclosures. We started to see abandoned properties. We had a portfolio of them too, and it's like, okay, nobody's answering this, nobody's making payments, something's going on. So that was the first sign of, okay, things are starting to fall apart a little bit. That was in 2006. And then I think it was around January of 2007. It may have been even December of 2006 when Merrill Lynch owned a company. They owned part of a company called Own It, and they pulled the plug on it. And that was really the catalyst. That was number one. There was a couple mumblings before that, but smaller. That was really number one. And then on the heels of that was Bear Stearns, and then Lehman Brothers. And then it was just lights out at that point. So we happen to be, I know a lot of people talk about the crash of '08, and that's where everything shut down, but it really started in the beginning of '07, and we were on the front end of that. So we have something in the mortgage business that was called the Implodometer.
What's that mean?
You can Google it, but it's a website somebody created. It's rudimentary, but it was tracking, and they've used it again, actually, more recently, so it's alive again, but they were tracking all the closures of mortgage companies, 1 through, I think it was like 400 or something. It was really sad. I mean, we're talking about good companies, not necessarily bad companies, but they were going out of business because there was no way to survive.
And we're seeing a little bit of it right now. I mean, a couple bank collapses.
A lot.
I got some friends that are, residential agents or they're residential lenders, and things are a little bit challenging right now. But this one's a little bit different than '08 because, if you go back to the pandemic in 2020, the Fed created a lot of inflation to save us from a market crash then when we had all the stay-at-home orders in place. And so to think that the whole world was on lockdown and there was no recession is pretty magical. But there's a consequence that comes with it. Right. And of course, there was inflation. And then now fast forward to 2023, the Fed is essentially creating a market crash to save us from record inflation. And so it all kind of goes full circle. So we'll see kind of how this plays out. But I think the main difference is in today's climate, there is a considerable shortage of housing across America, not just single family homes to live in, but single family homes to rent, apartment rent, units to rent. And, I think that gap is significant right now to where there's a strong demand for real estate, even though we're in this high interest rate environment. And so I think there's a lot of moving pieces. I think there's a lot of volatility in the marketplace. The stock market is down considerably from where it was a year ago. But if I'm a betting man, I believe that, when this is all said and done and the dust settles, I think real estate that produces cash flow is going to be the real winner.
Oh, I fully agree with you. I'm a buyer in this market, and I'm constantly looking. It is difficult to find property, as you know, right, because of inventory, and that is the significance, the one big significant difference in this market versus what was before. I just read something the other day that said, based on current housing starts and population size, we're 8 years before we have enough housing to meet the population demands.
Yeah,
that's
I believe
a long
it.
time.
That's powerful.
Yeah.
Yeah, it's and it's not just core markets. This is a lot of major markets around America. So we'll see. It'll be interesting to see how this all plays out. But I'd love to learn a little bit more about your transition. How did this whole idea into Homepie come to fruition?
Yes, happy to answer. I was my transition, but
not that kind of transition.
Yeah, we talk about this. No, I'm super excited, but thanks for bringing that up because I'm wearing the shirt, but I'm super excited about this. Look, mortgage is in my blood. I've got a successful mortgage company. We're struggling today like everybody else is in the mortgage business, but we're growing, and I've got a great partner that runs the day-to-day of that business, which enabled me to actually take a vision I had from a long time ago and make it reality. In 2019, I thought about maybe I should do this, right? And so I'll give you an idea where it came from, this idea. So to my core, my blood, I'm actually a salesperson. I'm an originator of mortgages, right? Mm-hmm. And through years of being a top producer, and anybody who's originated any number of mortgages would agree, you just happen to help people that didn't have a real estate agent. So think of like family members selling from one to another, or a landlord selling to a tenant. They didn't need an agent I've got built-in buyer. That type of scenario, they talk to a mortgage person. The mortgage person plugs in all the ingredients. Okay, yeah, let's help you. We'll get you a form for a contract, and we'll bring in escrow and title, and we'll walk you through the whole process. It's pretty easy for us. It's second nature. I had done that hundreds of times, and so in the back of my mind, I thought, why isn't there an easy way for somebody to maybe doesn't know everything that I know, but to follow some process to sell their own home? It's not that difficult. It really isn't. And it's a lot easier, believe it or not, paperwork wise and simplicity without agents, because you don't have all those extra documents that are in there to protect the agent, legally. You don't have those when you have a peer-to-peer sale. And so this is something that always resonated with me. Now, technology had come a long way since the time I thought about this idea to 2019. And so in 2019, I thought, you know what? I bet you that we could build technology like TurboTax did for tax returns, but use it for real estate. Simple, step-by-step process, take somebody through the process of buying and selling real estate. And so that's what I set out to do. So it really comes from a lot of domain knowledge. I'm not a techie person. I don't have a technical background, but I knew the process of creating product and hiring engineers and that sort of thing. And so I roadmapped it, and I sat down for 3 months, and we created these giant schemes of how the flow would work and what would happen. And literally, like, nobody had done this before. Nobody has done it. We're the only one, because I thought of it from the consumer point of view, not from like the Silicon Valley point of view. Like, we're just going to raise money. We'll force a market. This is, no, what does a consumer need? And I interviewed people. I talked to people. And so here's what we created. It's called Homepie. It's in market. We've been in market in California, been remaining pretty small because we've been beta testing, and now we're ready to grow. And we did a soft launch this week in Florida. So I'm super excited to talk about that. But here's what I created. It's a marketplace. So think of Zillow, Redfin, Realtor.com. When you go to those, and most people are finding their property on those, right? 98% of buyers are finding their properties. So it's a marketplace like that, but it's purely homes that are listed by owner. And you as a seller can list your property very easily, just like you would list your car on Auto Trader to sell it, right? Or you would list a product on Facebook Marketplace, and then you upload photos, and similar process, right? Within minutes, you can create a listing. We bring in property data from public records and so forth to help with the process. Load photos or buy a photo package professional like a real estate agent would. You create a listing. Now, one of the issues that FSBOs, or for sale by owner sellers, normally have is when they create a listing, they become a target for real estate agents to try and solicit them for a listing, right? Say, don't sell on your own. I could sell it for more. And so their phone goes off the hook so we hide them behind a messaging system on the platform without putting their personal contact information out there. They love that. Buyers then we can load this on the MLS. They can get different packages. Buyers come in, they find the property, and they can be agent represented. So we've made it very easy for their agents to guide them through the process, and for our FSBO sellers to work with the agents instead of making it really difficult. Traditionally, it's very difficult for an agent who represents a buyer to guide a seller that's non-represented through that process. But we digitize the entire process. So a buyer creates an offer in a step-by-step format. How much do you want to offer? What's your down payment? Are you getting a loan?
Can you submit an offer right there on your app?
Right there on your phone.
That is pretty badass.
Right on your phone. Do you want a loan contingency? And here's and we explain it. And there's videos and all this sort. Do you want, when do you want to close? Do you have to sell your home before you buy? All the things that go into creating an offer on a regular, traditional process, we built into the system. You can spin up an offer in like 6 minutes. Then it goes digitally to the seller. They get notified. They get a text. They get an email. The seller then can go in, and they can even do this with multiple offers. It's super slick. But they can then respond and accept or decline or counter each of those points in the offer, right? So yes, I accept that, your offer price, but I want you to close in 15 days, not 30 days, whatever it is, right? That process goes back and forth digitally till they agree to all terms. And then it populates one clean purchase contract that's built into the system, and they e-sign it right there. That's what we built. Nobody's ever built anything like that.
Wow.
Yeah.
Dude, I love that, man.
It's amazing. Then we help them through the entire process and take them over the close of escrow. And it's so much bigger than that, Rich. I don't know how much time we have today, but this is not a transactory process. It's not a platform that just like you use it every 7 years when you buy or sell. What we're creating is something where people can use this as a repository, meaning keep all their documents here forever. Because if I asked you on, let's say, one of your homes or properties that you bought 4 years ago, where all that paperwork is,
I hate all that paperwork. Right. I'm like, yo, don't send it to me, shred it. I don't need all this stuff. I'm not going to do anything with it. Just send me an online copy. That's all I need. And
you may not, but most people can't even find that. Where did I save it? What folder?
I'm always grabbing different closing statements. And
that's right.
I'm always having to reach out to escrow title companies, all that crap. But a lot of times, often they're in my Gmail somewhere. I just got to search it.
So if you had one place, one repository that you knew, you click on that property, you go to Homepie, you click on that property, and you go into that data box right there, and you go boom, and all those documents are right there in one spot. Wouldn't that be great?
So convenient.
Yeah. So that's one part of it. But think about beyond that, all the appliances, the model numbers, the serial numbers, your warranties, your paint colors, your tile, what tile you redid the bathroom downstairs, what tile you, all this sort of thing. Or maybe you had an insurance claim, there was a flood, and you need the contractor info. All that goes in there. And then when I go to sell the property, the next buyer, I click a button and it all goes to them.
So easy.
Right? So this is the kind of big concept that we have with this. And we're really early on, but we have helped hundreds of sellers already sell their properties and save on commissions.
I love that. So I got a lot of questions. I'm very intrigued by this model. So if I am a seller, you mentioned a buyer can come in with their own agent if they have one, or they can just go direct. And if I'm a seller, can I elect how much commission I'm going to pay to a potential buyer's agent? How does that kind of evolve?
You can. So you get the most exposure by putting your property on the multiple listing service. So the MLS goes into what they call an IDX feed. And that's how these listings show up on all these sites like Zillow, Redfin, Realtor, and hundreds of others, right? Because they're syndicated out through this process. If you don't go on the MLS, you're kind of like advertising in the dark, right? So yeah, you as a seller could go and you can actually create a listing on Zillow, but it's hidden. Like if you don't know where to go and click and find the FSBO listings, like forget about just finding it. And just about nowhere else except for, say, on Facebook Marketplace. And you know how terrible that is. You start looking for a home and you find a baby car seat, right?
Yeah.
Or Craigslist, which is not a great place either. I mean, we might as well run an ad in the paper. But so there's very few opportunities for a seller to actually get that kind of exposure. So you got to be on the MLS. The MLS then puts that property and syndicates it out and shows on all the major sites. So with 98% of buyers finding their own property, that's where you need to be. So you have to, if you're on the MLS, you have to have put a commission in there for the buyer's agent. When we started, we let the seller set their own commission. And that was a mistake because they were setting them very low. And then agents would look at it and go, I'm not going to show this property. Even though they shouldn't do that, they were. It's just human nature, right? I can show this property down the street and make 2.5% or 3%. Or right. I can show this property and make $5,000. Like, what are you going to do? So we said, look, you need to offer at least 2%. So yes, big savings, or you can pay 2% or you can pay 5% or 6%, right? 2% is a lot. And you can make that up. Like, especially in a market like this, where it's still a seller's market, bury the 2% in your list price. Like, just get 2% more. That's not difficult to do. You sell for 500,000, sell for 510, right? You sell for $1 million, sell for $1.02 million. So it's not that big a deal. And once we educate them through that process, they understand. So now agents come in and they can connect with their buyer on our platform and guide them through that process. And then the buyer just signs. So the agents actually love it. They've asked us if we can take this software, white label it, and put it out there for them. Yeah. So that might be something we do in the future, but
I love that.
That's what we created.
As a buyer investor, in the commercial space, I never use a buyer's agent. In the commercial space, 99% of all these transactions, they go through the listing broker.
Yep.
And a lot of these deals, if you submit an offer or you're inquiring on a particular listing and you have a agent representing you on the buy side, a lot of these commercial listing brokers they're not gonna want to do business with you. If you would, they'd like to double in. It's very common in the commercial space, but in the residential space, it's not very common for these listing agents to double in these deals. A lot of people have buyer's agents. And so for me, I've kind of taken that same philosophy in the commercial space to the residential space. And so I always go direct to listing agent. Back when we had a more competitive marketplace there, you'd be looking at a deal, there'd be very common for there to be 25, 30 offers. Well, how do you compete with that?
That's right.
One way to compete is to not have a buyer, agent. And so if I submit an offer and there's 19 other offers on the table and I'm the only one without a buyer agent, well, guess whose offer is going to look the most appealing to that seller, to the listing agent? It's going to be mine. And that automatically puts me in the top percentile of all the listings out there. But on the flip side, if it's not a competitive deal, let's say the deal's been on the MLS for 35, maybe 90 days, it's sitting there stale, not a lot of activity. Well, if I go direct to listing agent, that gives me even more negotiating power and more leverage in terms of negotiating the terms and the pricing that I want, because one, the listing agent could, forfeit some of their commission if they know they're going to
Sure,
double in the
make the deal
deal.
work.
Also, number two, it just gives you a lot more wiggle room. So for me as the buyer, I've always gone that route. But I understand a lot of buyers out there, residential side, hey, they might be a first-time home buyer and they need someone to hold their hand, So it's interesting, but dude, I love everything that you guys are doing in this space. What are some of the challenges that you've seen thus far rolling this out? Hey guys, real quick, I hope that you're finding value in this show. If you could do me a huge favor and drop a 5-star review on Apple Podcasts or whichever platform you're listening on, it would mean the world to me. Also, if you know of anyone that would potentially benefit from this podcast, feel free to share it with them so we can help more people build wealth through real estate investing. Now back to the show.
Probably the biggest challenge for us is, I've been self-funding a lot of this. I do have some investors. We haven't raised a lot of money, so we've been really a bit stealth to this point, and we're ready to grow. But obviously, 2020 wasn't a great period of time to raise money, which is why, again, we kind of took the slow route and, iterated in the product, good customer feedback loop, made sure that we had the right product that people needed and was working well. And that we kind of perpetuated through the last couple of years. And now we're ready to grow. And of course, then, banks have issues, right? Silicon Valley Bank is a big deal because a lot of VCs, put their money there. And now that even though they're taken over recently, it still has got to kind of work itself out. And so not a great environment to raise money, but that's probably the biggest challenge for us is it's time to raise some big dollars and really take this thing to the street. So we're considering doing a crowdfunding. It's kind of on the table. We're looking at it. I think it'd be great to have a lot of investor soldiers out there talking about, what we're doing. So there's a chance we'll do that. But, we're going to open up a round here in the next week or so and just start raising money again.
And where are you going to put that investor capital?
Well, a lot of it's going to be in marketing, and then about a third of that in engineering, and then just personnel and growth. And we have to have SDRs that help people run through the process. This is not, even though somebody could digitally do the whole thing on their own without speaking with anybody, society's not quite at that spot yet. They're not ready for AI to take over. And it is a big deal for most people. It's their biggest, purchase or sale. And there's an emotional component to it. And so we need to have people that are professional, that know what they're doing, that are there to bounce questions off of and that sort of thing. So that's about a third.
Yeah. I mean, it is a huge play. I mean, a lot of states, it's common to charge 5, 6, 7% commission to the seller just for selling your property. And that's on the total purchase price of the property. But let's say that it's $1 million property you're selling and you only have $100,000 of equity built in. If you're paying a 6% commission, that's $60,000. Yeah, it's 6% of the purchase price or sale price. But to your equity, that's 60% of your equity. That is a huge lever. And if you go into a place like Los Angeles with this new mansion tax that they just implemented on the 1st of April, which is unfathomable to me, what is it, 5.5% for anything above 10 million and 4% above 5 million. And they call it the mansion tax. I like how they kind of slid that in, but this applies to all real estate, not just residential, but also commercial real estate. And so, if you're paying 6% commission plus a 5.5%, mansion tax, that's potentially, what is that, 10, 11.5%?
That's right.
That's fucking crazy.
I know. That's really, that's really astute of you. No, most people don't understand the impact on equity, right? And that's really what you have to be thinking about, because if you think about that scenario you just presented and what that $60,000 could do for you, or even if it was $40,000 or $30,000, this is down payment on your next home. This is college for your kids. This is being able to retire now versus having to wait a year or two. Like, it's a big deal. This is real money. And people recognize that. And because there's been more lift by the consumer now with their ability to find their own properties and, the education that's online, wherever they're getting their information from, there's the information's out there. People can figure out how to manage the process of buying or selling. They don't put a lot of stock in. And look, I want to make it really clear. We don't think there's a place where there's no real estate agent. That's not it at all. On both sides, listing and purchase. Look, there are many buyers that don't have the time or interest to sell their own property. Like, it's worth the money to them and it doesn't matter. And there's others that they couldn't think about doing this on their own. But we do think that we could extend past our beachhead market. So to give you some perspective, traditionally for decades, 10% of all sales, I've just used that, sometimes a little more, a little less, 10% of all sales have been agentless. Okay? It's big. It's a big beachhead market, right? So in 2020, 2021, I believe there was just over 6 million homes that sold, right? And we've seen a little decline since then. But if you think about 10%, 600,000 homes, no agent, right? That's a big beachhead market. Average home price across the nation, 350,000. I mean, that's a lot of money that's on the table. But we think that we can breach that. If people knew that they could sell their own home, that we could breach that 10% and get it as high as 25%.
Yeah. I'm shocked that there's not, other companies or other people that have, rolled this business model out with the same force that you are earlier on.
There have been. Like everything else, there's always that, great idea, not the right time, right? But we think that we're hitting both right now.
What makes your product different than the ones in the past?
The main difference is we come from a real estate background. And so what we've designed and what we've created with our technology has not been created before. Like that's really our distinguishing factor, is that this tool, this offer negotiation tool that produces a purchase contract, is just one element of many others that are super unique and proprietary to us. And that's the idea behind this, is to create something that not only can get you through a transaction, but then do things beyond the transaction to help while you're living in the home, to make it really easy for you.
Got it. I'm curious, what states in the country lead the country in terms of amount of FSBOs?
Good question. So the reason we're going to Florida is they're number one. So so we've been in California. California actually dropped down to 16th in the nation for FSBOs, and Florida is number one.
And is that ranked based on percentage of all home sales, or what is that?
It's the number of homes that are selling FSBO in those states as compared to the number of total homes being sold. So I'll give you some perspective here. Right now, today, there's about 144,000 listings in Florida, and there's almost 9,000 for sale by owners.
Wow, that's a huge number.
That's listed currently.
Yeah.
In California, there's about 67,000 homes for sale, and there's about 1,700 of them that are FSBOs. So there's a big difference in the count.
What are some of the other leading states?
Behind Florida is Texas, and then Georgia, Michigan, Arizona. Those are the top five.
Wonder what the correlation is there. Like, I wonder if it's this, I know Florida, Texas maybe has a higher concentration of like retired folks or like older population. Those are conservative states, generally speaking, as Georgia. Georgia is.
Yeah.
Michigan.
You know what? I don't know if Georgia is or not, actually.
Okay.
I don't know if that has anything to do with it. We haven't really pulled back the covers on this, like to really kind of figure out why that is. Our research was really like, where do we want to go next? Where can we get the most traction based on that beachhead market of where the existing FSBOs are? But we really haven't taken the time to kind of go beyond that. I could get back to you on it.
Yeah, I mean, I'm just personally curious. I know Arizona, Texas, Florida has a higher density of like, retired folks. And I know that demographic, that grew up in the 30s and the 40s, they call them the savers. I could see them wanting to save on commissions. Yeah. I wonder if that has any correlation. I'm not sure.
It very well maybe. Yeah.
Interesting. So what are you offering to your investors? And you mentioned you're going to do another round of funding. What are you offering to these investors?
Well, we haven't formally launched it yet, so it's not completely finalized. But this will likely be a safe investment, which is SAFE.
What does that mean?
It's
generally speaking, what is it?
Future equity.
Okay.
Simple something future equity. I'm sorry, I'm just
you're okay.
Not remembering. But
what's the concept?
And then it'll come to me. But basically, it is, hey, we'll create an investment right now. It won't be an equity round, but when we do convert it to equity, it'll have terms that will not exceed this valuation.
Gotcha.
So you're putting your money in now for a future equity round that it will convert, and then there's a limit. So if the value of the company exceeds that limit, you still get that limit, right? Mm-hmm. But if it comes in less than that, you get less. So it's a safe way of investing.
Okay.
Yeah.
I love that, man. Is because I raise a lot of capital to buy these commercial real estate deals. Raising capital for a startup, is that a much of a different process in your estimation?
I think so. There's nothing tangible, right?
Mm-hmm.
Like when you're buying property and you can actually feel it and touch it and walk in it and so
Mm-hmm.
forth, it feels like it's tangible. It takes a certain person to really understand about investing in a company, a technology company, to understand that, look, most of them are going to fail. And that's just a fact. Most technology companies fail. But the ones that make it, they more than make up for it,
Mhm.
right? And this is what venture capital does, and they understand that there's a ratio there. So if they're investing in 100 companies and 90 of them fail, the 10, more than make up for that.
Is the goal to take this thing public one day and have an IPO?
Yeah, it's either that or an acquisition. We have a few targets in mind
Okay,
for
you have some
acquisition.
sort of exit.
Yeah.
Would you, even if you guys had a big exit, would you still want to be involved at a limited capacity?
Yeah, I mean, I've got a passion for this.
Yeah.
But I've always said that I will do what's right for the company no matter what. So this is not about my ego. This is not about making me well known or any of those things. It really isn't. This is about making sure the company is successful and that the investors get what they expect out of it. And so if at some point in time it makes sense for me to step aside and another CEO to come in, then that's what I'll do. It's really just not about ego for me.
Yeah. What do you like to do when you're not, working on this startup company and crunching out loans?
I like to exercise. I work out. That's part of my daily routine. I do that for just body, mind, spirit. It just, it keeps me active.
You got a family?
I'm not young.
You got kids?
I do. I've got 3 kids. They're adults, 26, 24, and 20. So my son, believe it or not, is a real estate agent.
Oh, wow.
And he's a very successful real estate agent. And even he and his friends see what I've created here, and they're like, Dad, you created something that's like, this is the future, right? They recognize it. Again, not that we're going to take over for real estate agents. Like, he'll always have his customers that he's carved out that niche, but this is separate from that. Like, these are the people that don't want to hire a real estate agent anyways, or see a different value play. And my middle daughter, she's an Arbonne consultant, and she's got an amazing work ethic. And my whole family's, health and fitness and all that. And then my youngest is a well-known dancer and influencer.
Oh, yeah? What's her name?
Her name is Casey.
Okay.
Casey Rice.
What kind of dancing does she do?
So she's done all sorts of dancing. Short little story here. When she was 10, so 10 years ago, she had the first dance that's gone viral.
No way.
And it went viral because Katy Perry retweeted it.
Mm.
And it was a crazy period of time. And like I said, she was 10. She was just a little girl. She was on CNN. She was on the Queen Latifah show. She was on Ellen. She was on like all these different things. She was just unbelievable. So that kind of propelled her career into what she is today. But she's awesome, just pure, just goodness. And, the people that follow her, the kids that follow her, and adults even, she's very impactful.
Yeah.
So,
well, shout out to Casey Rice, man.
Yeah,
That's got to make you proud, huh?
Thanks, brother. Yeah,
I love
absolutely.
that.
All my kids make me proud.
I love that.
Yeah.
Well, dude, I appreciate you coming on the show, man. I'm super excited for your new business, and I'm definitely excited to see where that goes. I'm definitely a fan, and keep doing what you're doing, man.
Hey, Rich, I appreciate you having me on here, and one day I'll bring you on mine as well, on my podcast. But yeah, I appreciate you having me.
Love
very
you,
much
man.
so.
Love that. Well, anyways, listeners, thank you for tuning in. We'll see you in the next one. Peace.